What's up, guys? Good afternoon. Get started in a minute. How's everybody doing? Just give me a quick sound check. It's 12:30 New York time. Lunch break. Good trading morning, but I think it's a decent time to take a break. Give everyone a minute to join in. I will retweet the link. And we'll get started. How are you guys doing? How's everybody feeling? Yeah, I know. I'm in control. I'm going to change the screen. Hopefully for anyone tuning in right now, they're listening. So they know that the stream is getting started in a second. Ugly move by the S&P. Almost all the way back down to yesterday's close. All right. Thank you guys for tuning in. If you're not subscribed, go ahead and hit the subscribe. Jesus. Go ahead and hit the subscribe button, hit the like button, all that jazz. And I will be getting back to streaming. I've taken some time off in the last couple weeks. I've streamed, but I haven't been doing it consistently. Like for 2 months, I was streaming every Tuesday and Thursday. But with the holidays and, we have like 3 weeks now until our baby's born. I've just been getting a lot of other things taken care of on the side. And, I go back and forth between wanting to finish out the year and just call it a wrap and not trade the rest of the year to getting pulled back into the market. So it looks like obviously I'll be trading to the end of the year. But I had a week there where I was not having a good week, and I was just like, fuck it. Why even waste the effort? I got a lot coming up. We have Christmas coming up for us, and the baby will be being born probably a little early. So not that early, because technically right now the baby can be born and it's completely fine. But the due date was supposed to be like January 9th. And as of the last visit, the doc was like, this baby's probably going to be coming a little bit early. So we might have a Christmas baby. Anyway, let's change the screen. Shout out to sponsor Phemex. So Phemex is very reliable exchange. With everything that's going on, I trust Phemex. They have their proof of reserves. They have their liabilities that are accessible to all users. It's a great exchange for trading alts, trading BTC futures, trading ETH futures. The spot lately has been very thin, but honestly, exchange volumes across the board in the last week, for the most part, have fallen between 40 to 75%. So no one has escaped what we've seen across the board as far as like no exchange in particular. Phemex, I think, lost like 70% of spot volume, but shit was just drying up across the board, like I said. So nothing that honestly really stands out. But if you're interested in signing up to the exchange, they're offering right now for the sign up link below a bonus of, I think, like $4,200. So obviously that's for qualifying deposits. But it's still no KYC. And it allows you to, or rather for non-KYC accounts, which there's only a few exchanges that still offer that, Bybit, OKX, you could withdraw up to $50,000 a day. And I'm going to go over on Phemex in a minute how I placed the CPI trade today, because it was not something that was rocket science. I ended up just bracketing price, but I'll go into that. I put a little bit of money in a sub account. And if there's any alt opportunities, we'll trade on that platform as well. But shout out to them. Anyway, let's get it started. There's probably a lot to unpackage in this stream. When was the last time I streamed? Was it Friday? Was it Saturday? Who knows? I don't remember. This month has just been melting. It feels like one long day. I appreciate the congratulations. Say hi to everybody. Some familiar faces. The due date, it's tentative right now. So again, I think it was like supposed to be, I should know this. My wife would kill me. I think it was supposed to be like January 9th. And then just as of the last visit last week, the doctor was like, oh, yeah, don't expect it to go all the way. All right. So all the formalities aside, remember, none of this is financial advice. It's just strictly for entertainment purposes only. It's just how I'm trading. I have the DOM up. It's going to be a pretty casual stream. I don't think we'll be going to be taking any trades, but in case anything pops off in the ES or with ETH or BTC, we'll be able to take advantage of those opportunities. But anyway, yeah, this is Sierra charts. So I have on another screen, I have the entire Sierra charts chart book, but I just have within view right now. You see that there is the ES DOM. So we're looking at resting bids, resting offers. I have another DOM that's a little bit wider, but for the sake of the stream, I use this one so I can fit it into the window. But I have another DOM that looks like this. So see, this is the ES, but you could see that we have, just clear this. One sec. What's going on? There we go. We have the footprint that develops on the side of the DOM. So this morning I took a couple trades. I was trading the NQ. I was trading the micros. I had a bad week trading the ES. Had a bad 2 weeks. Like I was having great mornings, and then I would just finish it off in the afternoon by punting. And I think I lost like $24,000 in a matter of like 2 weeks. And the like peak to drawdown was just disgusting. It was like I was up like, $57,000 in profit and gave back, like 79,000 or something like that. Just absolutely atrocious. But that's what happens when you're trading distracted and when you're not really focused. And it's really important, obviously, to reel that in. So a lot to unpackage. I'm going to take questions. Yeah, I am using XO again, just for crypto. It was to use Sierra charts and Sierra charts Denali with rhythmic data or rhythmic execution, and to connect to Binance. It requires that you open up. Requires that you download another Sierra, put it in its own folder, and then you open up another Sierra just to have the Binance data. So, maybe with Teton routing, it works differently, but I use Rhythmic. And I don't feel like doing that, opening up. You can open up in Sierra, you could open up 2 instances, but for some reason, I cannot have a connection to the CME, be trading legacy, and then open up Binance, which I was excited to use Sierra again because Binance is really where all the important activity occurs, although it's going to be important to focus on how flows shift moving forward because obviously there's a ton of panic around Binance right now. And a good amount of volume has gone to Bybit, OKX. There's been inflows into Phemex, right? But yeah, I have to go back to using XO, which is not a pain in the ass because honestly, XO and Sierra, they don't really use much in terms of system resources. So there's really no strain. And I have an absolute machine for a computer, so it shouldn't be a problem anyway. Listen, last night was like the first time that I've seen people on crypto Twitter like happy again. So finally, it looks like SBF is being brought to justice. There was a lot of talk leading up to this. And listen, it hasn't even been that long. We're talking about middle of November now, about whether or not he would, face the music for what he is responsible for, what FTX is responsible for. And crypto Twitter obviously is very impatient, but the legal process is long and drawn out, and the government has time on their side, right? So that's one of the benefits of the statute of limitations, right? There's really no real reason to necessarily grab him right away. I think that he ended up doing more work for them in the time being because of his willingness to speak in public or in public forums, which was obviously, I think, a really poor decision on his part. He ended up talking way too much, and I think it's not really necessary, for example, that he even was there to testify today, right? Enough has already been put out on his own, of his own volition, with really no resistance, again, on Twitter Spaces and interviews and so forth. But as the saying goes, right, the what is it called? The wheel. What is it? The wheels of the mills of gods. They grind slowly, but they grind fine, right? And another saying is, with respect to the wheels of justice or whatever. So justice will be served. And for anyone who's thinking that he won't face time or he's going to get off with a slap on the wrist, this is way beyond that at this point. I'm pretty sure, don't quote me, but I am pretty sure that the way it works is at some point the damages and the years in prison go hand in hand. But then I think he hits like a threshold. So, if it's $10 billion, he looks at like 120 years, right? So I think the last I saw was 100 years now. I think he's going to be in jail, honestly, for 20 to 25 years. And the idea that he bought off politicians is just absolutely atrocious. Because as soon as they got what they needed from him, there was no reason to keep him around. The guy definitely did not fit in with their circles to begin with. There's no reason to assume that suddenly he was going to be buddy with people, right? That really probably didn't want any part to do with him besides his money to begin with. And yeah, there was a lot of conspiracy about like him being a government agent, just like way too much conspiracy on Twitter to begin with. And listen, there's some times where it's turned out to be true, but for the most part, I think imaginations just run wild a little bit too much, and things take time. So I think one of the people that had sort of the most, cogent, sort of well-formed opinions on this was actually Martin Shkreli, of all people, and he's been in jail for obviously securities fraud. He went to jail for 4 years, and he's been putting out some YouTube videos, and he's actually streamed himself trading, which is pretty funny. He has a way more fundamental approach to markets. Shkreli actually was part of, he was a hedge fund guy for a while. But he had some great points. And anyway, not to beat a dead horse, but let me just look through the comments, and then we'll go through the charts. I'm going to give away 2 Arkham invites again. So the last giveaway stream was absolutely horrendous. I mean, I got taken for a few extra $100 by just not paying attention, forgetting that there's scammers all over the place. I think I probably gave away like $400 to scammers, and it was because I would contact someone in the YouTube comment. I would say, congratulations, you won. And immediately, there would be a fake account that was created with the same avatar, the same name as the person I was congratulating, right? I only noticed afterward that sometimes it'd be a shade of difference in terms of the color of the avatar. Like instead of like dark green, it was like a slight light green. I'm like, fuck, man, I should have seen that. But obviously I didn't. But yeah, scammers running wild and ended up taking me for maybe like 300 or 400 extra bucks. I'm not even sure if the people that I contacted all got back to me. But the best thing to do is to reach out to me on Twitter. Anyway, the giveaway for this stream. So at the end of this stream, go ahead on Twitter, leave a comment on this post. All right. So on this post, and I could verify that whenever I, congratulate you, after I do the random drawing, that it is you, and I could talk to you in DMs. But leave a comment on this post about what you thought about the stream, what things you would like to hear more of, and I'll do another random drawing, and I'll give 2 Arkham platform early invitations out. It's a sick platform. It's an absolutely sick platform. Most people today are sharing it on Twitter to pay attention to what's going on Binance. But anyhow, so we're gonna go over BTC. We're going to go over ETH. We're going to go over the ES or the S&P, which is almost at the point of yesterday's close, and I'm looking at the S&P to determine that. This is, as you know, this is, for example, going to be a different price. So the S&P and the ES trade at different prices. But for the most part, this looks like I wouldn't necessarily need to see that this closes right to this extent to start getting long for some kind of mean reversion. But we'll get into that anyhow. Markets were absolutely ripping today off of CPI. Just some quick thoughts on it. The important meeting is tomorrow. So tomorrow is the more important day, rather. Obviously, it's fantastic that CPI came in as it did. You can see the last few months forecasts and actual trending down. So that's great. But I think, the Fed and Powell have made it kind of clear that these are just like they're individual points and something that's much larger that they want to see. So this kind of looks like to a lot of people on crypto Twitter and a lot of people in crypto, like it's some kind of watershed moment, but it's one CPI, right? So more importantly, tomorrow is not only the rate decision. So a consensus right now, or what's priced in for the most part, is 50 basis points. So if we get 50 basis points, I think you'll probably see a positive response by the market, but I wouldn't expect too much from that because, again, that is kind of anticipated at this point. I think 75 basis points would send the market packing lower. And obviously, if it came through something ridiculous that I would not expect, 25 basis points, then we're going to absolutely fucking rip. But more importantly than that, because I think that what you're probably going to have is you're going to have 50 basis points, and then, as always, the most important thing to focus on is the conference after. Is Powell sort of short, curt, to the point, or is it drawn out and maybe gives more, a little bit more insight into what peak rates will be or peak rate will be, and if he has some kind of dovish tone versus hawkish tone. Obviously, the point is that the conference after is always more important than the actual decision. Because he could always say something that sends the market one way or the other if he's not speaking carefully, which obviously he always is trying to. And for those of you that don't know this, I have a Discord now. So the link is on my Twitter. And in this Discord, we have the benefit of having, so in the macro channel, a buddy of mine who I met through GCR's Rebirth DAO in Alpha Group. This is David Zero. And David Zero, I really hope that he puts out a macro newsletter because he is just on the ball, on the money, extremely comprehensive, and he blesses this Discord. I say blesses because I really appreciate him. With every week he puts out just a short, concise, to the point opinion on what to expect for the week, all the important events that are coming up, what to weigh more heavily. And you could see that yesterday's post, this week, the most important week of the year, CPI tomorrow, FOMC on Wednesday. Don't enter any trades based on individual value on assets before this finishes. The most important thing to look for, I inserted 4 in that, is a possible peak rate Powell will announce. Wait until it comes. The individual rate decision in this meeting does not have any significance. Markets are already priced 50 basis points. That is all I can say about this week. After FOMC, we could talk about it if needed. So just as he said, possible peak rate Powell announces. And it's all about what the market is expecting right now, right? And how that jives with expectations. Okay, any questions before we get into it? I'm going to go over how I traded CPI today. So most of you know my CPI game plan or my event game plan. My event game plan is pretty simple. It has been this entire year. It's worked flawlessly this entire year. I can't say flawlessly, actually, because the last 2, I believe, it didn't work as expected. But it actually worked perfectly again today, even though I had a bit of a different approach. But just my 2 cents on on events in crypto, and obviously they're correlated to legacy. So I think that with legacy participants, or I'll call them like TradFi tourists, taken out of this market is going back to being a little bit more inefficient, and I think that's great if you're a trader. And today's event was really clean to trade. For the most part, what I do is I'm looking to join in on the first move and not really focus on what the actual print is, what the data is. I'm looking to join in on the first move as fast as possible and capture, anywhere between 1.5 and, 3 basis points after the move. So kind of finger on the trigger, finger on the hotkey, right? And if the market spikes up or spikes down, immediately after, I am in as fast as possible, and I have a predetermined stop. I have a predetermined exit that gets me out of the market, and my stop is always just at my entry. I don't let the market go past me one bit, because you see how the market moves. So today, this is what I did actually. And I put a little bit of money in this account. This is right on Phemex, so this is something that you can do. All I did was bracket price. Kind of dumb, but I mean, I don't want to say it's dumb, but it wasn't a very difficult approach, and it worked perfectly. So let's say that we're down here. This is going back to pre-release. So when was that? One sec. So right here. This is all I did. So we're looking at 17.4. I'll just put this 17.3. So I put them kind of wide to begin with, right? And then I actually can't put it between where we are now and that price. So we'll just move this up and say, imagine CPI was going to be released in 30 seconds. So this is all I did. And I'm telling you, it was dumb, but it worked. And I know a bunch of other people that do this as well. So we're 10 seconds out, and this is me. Right, so I'm about 100 points away from price. Sometimes there's a little bit of a ramp up or down into the actual release, and obviously that would have been something I would add to adjust to. But I'm looking at the clock, and we're like 6 seconds away, and this is all I did. Bracketed price. All right, so as soon as I did that, a couple seconds later, the print was released, and I didn't have to worry about manually entering into the trade. So I didn't have to worry about, clicking any buttons. I had a conditional market order, and it was opened as soon as it was triggered. And as you guys can see, I shared that this morning. That was, let's see, what did I get out of that? So it was a 7-second long trade, and I was entered in at 17,640, and my exit was $300 away. So that's good. That is, multiples of what the 30-minute ATR is. So that's a trade to me that was really worth taking. That's the first time that I've bracketed price. So, I've usually wanted to enter in when I could manually, because again, there's some times where there is and listen, I talk about Phemex and hey, sign up to Phemex, partners with Phemex, but every exchange offers this. So by no means take this as me trying to just advertise a feature that Phemex has. Like every exchange has conditional orders. So I think more importantly, I always want to stress this during every stream, because I don't know, I feel uncomfortable talking about, any exchange right now, right? Because at the end of the day, like if I've said this so many times, if there wasn't the bit license, if I didn't have to be on Coinbase, I would be on FTX, right? I would have been saying, I trust FTX. So obviously you're responsible for yourself, and you really have to look out for yourself. And this is my opinion with all exchanges. Shoot first, ask questions later, right? So if you hear a hint of Binance being insolvent, get the fuck off the exchange, right? What do you have to lose by being wrong? Maybe you miss out on a pump. Like the loss is major, right? You only have to die once when you're playing Russian roulette. So that conditional order type is available on any exchange for the most part, right? And you have to be trading futures if you want to short. So any exchange that offers a futures product, if they don't offer a conditional order type, then you have reason to get off the exchange to begin with, because there's no reason for an exchange to not offer the most basic of order types. But wicked smart. All right, let's get into it. Did I miss anything? Anything I wanted to talk about? Okay, so I just briefly want to touch on this. This was something I touched on during the last stream. Be mindful of where the dollar is, right? Now, let's say tomorrow comes and passes and it's, risk gets kind of the green light. Powell comes in dovish. We get 50 basis points, but, terminal rate, we have an idea of what that is. Peak rate, we have an idea of what that is. And the market responds positively, likes everything it sees. Then that's a different story. But until then, right, the dollar right now is at an area where you would expect it to find support. It's a reasonable area to expect support, right? So this was a multi-year high at this point. Going back to May to, June of this year is first time breaking out of that. So, high time frame, a retest of a high time frame level. The first retest is the one that you could usually rely the most on. So I said during the last stream, just be mindful of, any kind of significant positioning in risk, because we're approaching an area where you could expect some kind of bounce, right? Whether or not this reverses from this level or continues down remains to be seen, but it is an area where you can expect a bounce. And if you're looking at, and I said more specifically that if you're looking at the relationship between the dollar and the S&P this year, right, like everyone's aware at this point, I'm kind of repeating something that we're all aware of. There has been an inverse relationship between the dollar and the S&P. But what I mentioned during the last stream is that this has not always been the case. It hasn't always been the case that, a strong dollar has meant that, we have a weak equities market and risk is underperforming. That hasn't been the case. We've years where, we have strong dollar and we have strong markets and risk represents that as well, or we see strength in risk, or just strength in the S&P, right? So that's a benchmark, obviously. So we're at a level of support, right? So it wouldn't be an area where if I was looking at this from a technical standpoint, I would really want to be looking to short or sell. And because there's that inverse relationship between this and equities and risk in general, if you just extend that across the risk curve, you have to be pretty careful about getting, overly aggressive in the indices, whether you're looking at whether you're, an ES swing trader or a NQ swing trader or QQQs or whatever you're, pick your poison. So as far as the S&P goes, I talked about this a couple times on Twitter. I talked about this in the last stream. This spike obviously due to CPI, but there's been many times before where you've had a significant sell-off, market breaks market structure and gives you a last throwback. So this was the first time we had a significant market structure break for, a couple weeks. You can see we're still kind of banging at this trend line. This is like the fourth time. I wouldn't want to be leaning on this trend line at this point. But the most significant level I think that stands out is this monthly level, right? So this monthly level, this is going back to that composite that I talked about. It was, kind of lines up nicely with a prior weekly composite. This is the monthly highest close, right? We're going back to July, so in the summer, and we're looking at around, we'll say like 4150 roughly. So up into that level, it doesn't make sense to be overly aggressive. Through that level, above that level, price finding support, finding stable ground above 4150, 4135 is a different story, right? We see that, things remain bid. That's different than trying to front run it, right? So key level, high time frame level, and again, the dollar is at an area where you could, reasonably expect it to bounce. So this is also before we have any kind of rate decision or any words from Powell. So just be careful. All my trading right now is short term, right? I've said this many times before. When the Fed, quote unquote pivots, and we're not talking about a pivot resuming QE, we're talking about what the market is interpreting as a pivot now. So a slowing down of rate hikes, a less aggressive approach, some kind of end insight. When the Fed does pivot in this way, you still can expect, I think, like some sideways markets, but I think you have a lot more clarity at that point. And if the market does start leaving and traveling north, I don't think it's something you have to be too worried about entering in like a little bit late. And the same thing applies to crypto. Like There's been many times before where, and I think it's always honestly better off to wait for price to prove its point, right? So, I've said this many times before. How many times am I going to say that? I mean, Jesus Christ, I'm just patting myself on the back, or being redundant. The, confirmation is the cost of doing business, right? Institutions like to buy into markets that they can be confident in. And a lot of times that means buying into higher prices. Trend followers are the same way. Trend followers are not going to scoop the bottom or sell the top, but they're going to be operating close to those levels, right? So, you're never going to get in at the exact turn. You're never going to get out at the exact turn. But if you're capturing, 70, 65% plus percent of the move, that's amazing. So I think when we have kind of regime changes, especially in higher time frame moves, right? Things that are like primary trend, these things move slowly. So I've said many times before, holy shit, I just said that again. And I'm thinking of it again because I know Alexander just wrote LOL. I mean, I guess I have said these things a lot, so whatever. At least I'm consistent. So big ships turn slowly, right? It's not going to leave the port without you. When things change macro-wise, you're going to have a good amount of time. So I wouldn't be overly worried. So that's just my 2 cents on that. High time frame. Locally, though. So if we zoom out, high time frame, not a whole lot happened, right? This is a drop in a bucket move. We've just been so accustomed to volatility squashed that it's all relative at this point, right? I mean, it's always all relative, but like I said, I guess I'm not going to be hard on myself. It's just how I talk. Volatility, ATR, measures of volatility rather, just absolutely crushed. So talking about 30-minute ATR last stream, what was it, like 40, 45, 50. So the average 30-minute candle range was less than $100, which is gross because for a while, 250, 300, 400, 500 is the norm. So just, to give you an idea of how tight things are. So, any move that is 2 to 3x that is going to stand out, but it's in big picture wise, it's kind of insignificant. So again, just a drop in a bucket. High time frame, the most significant level on this chart is a level that's still above us. So if you're a bull, and you're getting in now for the change, then you're getting in early still, right? The most significant level on the chart, and I think, we have the benefit of proximity, is the underside of this prior structure that we were within since June, right? So, value had accrued between, say, around 18.8 and, 22.5, 23 for the most part. We broke to the downside. Great sign that the market doesn't just continue down, long period of consolidation like this. You don't want to fade the first move. The first move we got, though, was a significant move, but you didn't have any kind of follow through after that. So we're not looking at a market that is obviously like jumping to trend down further, at least in the short term. It's pretty clear. The reclaim of this low is what I have to see to get really bullish. Right? I think that the reclaim of that low just sets up some really obvious targets. You have a naked point of control that developed along the underside of this entire structure. So, what that means is most of the volume is done around here. So the market lost that. Overcoming this level, I think, is a pretty tall task. And the reason is that this did look like, the signs of a bottom developing to a lot of people. There's a good chance that a lot of people are still in position. And would probably like to get out of position still if the market came back to their entry point. So if you just look at the POC for this entire structure and assume that as like an average point of risk, you're looking at around 19,169. Now imagine all the people that put a position on there, and are still confident, but you know how it goes. If price goes against you, you're just happy to escape with your scalp if it comes back. You're like, whoof, wipe your forehead. I'm going to get out and I'm going to rethink this. And I'll get back in if we put in a higher low, if we begin to treat this area as support. I'm willing to buy back in higher rather than, continuing to risk that position after I've just seen it go in the red this much. So overcoming this level, I think, is would be a very significant sign, right? But I don't think that's something you can just take for granted based on this move right here. You know, we still have FOMC tomorrow. A lot could go south. This could very well end up being something like this all the way back here, right? We had a very significant move into the highs of that local range, right? Local range right here that just ends up catastrophically in the days that follow. So a really significant sign of strength would be reclaiming sort of that 19K floor, right? So that means we're able to move through this gap. We're not rejected at the underside of the structure, you know, weekly, daily levels. And if we're able to do that, I think that it's a pretty clean move up to, you know, 21.5. And then we'll see from there. Locally within here, there is a level that I think would be somewhat sticky short term. But we'll get into that in a second. So by no means has much changed. Again, I've talked about this setup many times before where you have, it's just stuck, guys. It's in my head now. Where you have this consolidation, and the most bullish reclaim is the top side of that, right? A big move up that holds that, and you have a V-shaped reversal. That's not happening, right? You know, that's very unlikely to happen. Or if it does happen, you know, it still implies that, you know, from point A to point B was still covered. But we have a lot ahead of us before that. So this is the first area of business, right? Range lows of that structure. You're looking at a monthly, a weekly, a daily support level that was broken, and would be reasonable. It would be reasonable to expect that it would do its job in the same capacity it did act as support as resistance if we were to return to it, at least in the first test. So you don't want to be blindly buying. If we zoom in a little bit, right, I have some levels marked off, so we'll just go through these. I talked about this the other day, right? I ended up looking for a short, flip long. I did that quite publicly, talking about this not being the most confident level for me to act on. So this level, I'm drawing too many things without saying anything. This level not being the most confident level for me to act on because this is the range that we're looking at, and this is just the midpoint. So I don't really like to get involved around the middle. It's an area that's usually abundant with liquidity, but it's not the most attractive area to get involved because it doesn't seem like anyone's getting really offside there. Whereas at extremes, you have a little bit more of that behavior to take advantage of. But we ended up forming this composite, and when we had the breakdown, I anticipated that we were going to test the prior composite. Now, I close this trade out and I flip long because, as I've said many times before, the breakdown followed by the reclaim is bullish, right? So you have a long period of consolidation, market breaks down, instead of continuing, re-accepts back within that range. You didn't really have any kind of challenged positioning on the way down. So a lot of times you just see that the range is recovered rather quickly. And you could think about that kind of in a slower moving version with this structure right here, right? So the same thing would apply, right, if this is multi-month value, if we were able to get back above that 19 level. So just keep that in mind. So we reclaimed that range, held the top side as support, got long there, was wrong about that. Market came back down, tested the low of that value, ripped back up, held the top side of that structure. These are really, I think they're really valuable areas to start looking for certain behavior to develop, whether it's, buyers getting absorbed or sellers getting absorbed, and really see who's in control at the extremes of these composites. And these are just formed by, combining TPO charts that have a significant amount of value overlap or are balanced to get an idea of where value developed over that, the course of that structure. High time frame, right? For this entire structure, we're sort of at the edge of where you would expect the range to be, right? High, low, or I should rephrase that because that sounded kind of wonky. We're at resistance, right? So an area where you would expect resistance. This is kind of a gap, right? In the sense that there wasn't a lot of development. We just moved pretty quickly through here, but you do have this kind of sticky point. So I think that that is something that you do have to keep in mind. It's not like it's a naked POC, but it is this high. It is this prior consolidation before the breakdown. So it is an area where you would expect stickiness. I think that if we're able to hold, which I don't want to get that confident because it's, you know, the S&P right now is retraced, looking really ugly. And again, tomorrow could be a shocker. But if we're able to hold this level, so if we're able to hold, for example, the daily highs, so just zoomed out, then I would kind of anticipate that maybe we get another run at today's high. I'm not that confident in it because this is kind of looking like a lot of other trappy setups where the market really piles into something, gets overly bullish. But again, it's one CPI print, and the Fed can come out tomorrow and completely, you know, throw cold water on this rally. And it's reasonable to assume rather that, or additionally, that Powell doesn't necessarily want to see animal spirits rushing back into markets. So as far as levels though, you know, this prior composite still stands. So this is a multi-day composite, multi-week composite. Just show where value is now that we've kind of gone through it at both extremes multiple times. It's a little bit higher now. All right, so the first area that you would expect support if we lost this daily level would be back at the top side of this structure. All right, so at the top side of this multi-week composite. So we're looking at going back, you know, it's like a week and a half long. Now, if we're trading back there, I don't know. It's if we have put in a candle like this, and then suddenly we're retesting this already, chances are that that's a pretty bad sign for, you know, where we are at that point, and the way that we moved down there that rapidly after this move. Right? Again, we have to, you know, it doesn't make sense to think too far ahead because tomorrow's you know, we're gonna have a lot more clarity tomorrow. But that's not necessarily the most attractive move to buy into. You know, after this kind of failure, you'd be more prone to looking, or I would be more inclined, honestly, to look for some kind of throwback to short, some kind of lower high to put in, or that gets put in to take advantage of, to send this back, you know, to mid-range even. So something like, you know, the market losing this level, attempting to break up again, seeing absorption, seeing that failure, and then getting something that ends up taking us back to mid-range and then takes us back to the lows. If you asked me about this morning, I would probably be a little bit more confident than I am right now. But again, I mean, as it stands, this is not looking that good. Just see if there's anything else that I was thinking of before the stream that stood out. You know, there is a lot of volume that was transacted on this candle into an extreme. So that's something always to keep in mind. The same thing happened in the S&P. I talked about value developing higher. And at the time when I shared that post, the ES was maintaining that level. The ES was maintaining that level of volume. So for this, for example, let me put the profile on. We have a good amount of volume that's transacted at the high. And ideally what you want to see in a move that is strong and supported is that when you have volume coming in, especially after the first big move out of a level, that at least the point of control holds. You can hear my dog growling in her sleep. That at least we're holding the point of control, and that implies that you're building value higher and holding it, right, and continuously auctioning higher. You know, you could look at something like, for example, the VWAP. Oh, she's awake. She's just growling because the Alexa said someone is at the front door. You know, here's the VWAP from today. I'd probably be more interested in focusing on a VWAP from CPI. So let me take this off. So, one sec. Previous day highs and lows. Where's my anchored VWAP? Here we go. So we're looking at, I'll just put this on real quick. Bear with me. I didn't have this set up. just to give you an idea where most of the risk is tagged on after CPI. There you go. So it's the same level as that POC. The point is, after a strong move, you don't want to see that the volume that comes in, the new positioning that comes in, is lost, right? Buyers want to see that that level is maintained. So in a breakout that has some kind of merit and you know has some kind of strength, what you should see is that the first time the market comes back to this level, that there is, you know, responsiveness by buyers there, and then we continue to press higher while maintaining that below us. So it's really bad when you have a, you know, a structure that breaks out, develops a bunch of, you know, starts developing value higher, see a bunch of volume come in, but then starts losing that level. And it's a lot more, I guess, it's a lot sharper if you look at something like the ES. So this earlier in the session, before all this developed on the way down and then left us with this because that wasn't there, this structure was basically something that just looked like this. All right, and we were holding that level higher, which was a good sign, right? So most of the volume being done there, you know, price continued to hold that. Then we lost the 30-minute opening range. Then we started trading where the bulk of that activity came in, and it's just, you know, imagine it's just a structure that's built top heavy at that point. So BTC is, you know, same thing right now. It's just a poor look by bulls. I definitely wouldn't be chasing this right now. ES, again, the S&P pretty much retracing the entire move. So did we get the full retracement? No, we have kind of a bounce right above yesterday's close. But I wouldn't, you know, I don't know if, let me see actually. Is there any sign of absorption at this low yet? Not really. On the way down, if we look at price and CVD, there was really no, you had a brief period of absorption right here at the low of that standard deviation band at the beginning of the move. So you had a period where CVD was trending down and price was moving sideways, but unable to recover VWAP. And again, all that fresh positioning isolated up here. And now it's just been sellers in control the entire way down. So that was a short-lived trade. That's all it was. No reason to get overly aggressive. Any questions, guys? Look at the chat in a second. I think I had something else I wanted to say that I think I forgot to mention. After this move right away, you had derivatives just chasing this up. So this is another, you know, kind of a no-no. Very significant amount of liquidations in the move, price moving sideways, open interest just going up. And if we look at CVD, not really showing us that that it's sellers that are really fading this or anything like that. So if anything, spot CVDs were trailing off more aggressively than perp CVDs, and perp CVDs were adding fuel in the wrong direction. So buyers rather. There's a little bit of a lag in the chat, so just give it a second. I think ETH is actually something that I want to say it has a cleaner setup than BTC. As far as us having much in the way above where we came in contact with. So if we look at, like I said, if we look at BTC, you know, you can see most of the activity is isolated between 15.7 and 17.5, right? But in terms of range extremes, we go all the way up to 18.226. So that is a little bit of a sticky point, and we did not touch that in BTC, right? And then above that, we have, so let's say 3% above where we are right now. We have a little bit of an area where you'd expect a little bit of resistance. And then just above that, 6% above where we are, an area where you would expect, significant resistance. If we look at ETH, we tap the extreme, and then from that point up to right here, so you got about a 10% gap. this is kind of that's what it is. It's a gap. I mean, it's an air pocket between the range high, right, going back to November, and a naked point of control as part of this move down. So there's a pretty significant gap right there. If you look at this on the daily, let me just take off my ATR bands. Previous day highs and lows. Yes, it's clear we had a breakout. You have, 1, 2, 3, 4, 5, 6. You have a multi-week range right here. Clean break above, but obviously into resistance. So it's, this is not, again, I posted this earlier. If you look at the S&P, if you look at BTC, this whole move is very correlated. So if we had support in the S&P, then I'm much more inclined to be confident in this setup right here. I mean, it looks like this is a clean break, right? But again, into resistance. If the market was able to find support above something like, if we look at where it developed, it's kind of right here. I mean, ultimately, like with BTC, you didn't want to see this much of a pullback, but it's not that bad because you would normally look at a prior range high or value area high of a prior composite as an area where you could expect support to be found. You wouldn't want to visit right away though. But looking at this on the daily chart, if tomorrow is somewhat decent and we don't have something that sends us to Hades, then this looks like a good setup back up to 1482 and quite possibly back up to the 1600s. Right? On the way down, when we've had these kind of one-sided, unchallenged moves and the market's reaccepted into those gaps, so consider this the reacceptance, and then you could kind of say, this looks like a clean break above this local level, but again, that's the extreme right there. You've had that entire gap covered. So maybe the best thing to do is honestly just say at this point, and I think it is, because judging by the reaction here, if we're able to retake that level, so 1350, and treat that as support, then yeah, you're into that gap. So maybe don't even treat this as though it's significant, right? Because that could just be your deviation that ends up breaking further down. If you re-accept back within this range, you're going to the low of the range. So if you re-accept back below like 13, you're hitting, very likely you're traveling back down to 1239. And if we have that kind of failure anyway, if we have something where ETH breaks back down into this range, I think you're looking at lower. Same thing as, if BTC were to break back below these highs, I think you have to just consider lower at that point. I mean, that would be just very ugly. So maybe the best setup is for ETH, a clean break above 1350, right? Clean break above 1350 leads to a pretty high probability move up to 1484. So maybe you do get left with something that's flagging up here. And if we're flagging up at that level, I would be inclined to buy that, right? So if we're putting in some kind of structure that's, we're seeing that sellers are getting absorbed on the way up, putting in sort of micro higher lows at this point even. We're grinding against that level. If we're doing anything like that at 1350, I would probably just buy and place a stop back within this gap underneath structure, because I think that that's a pretty simple move. I think that that's something you can kind of take for granted, honestly, when you re-accept back within gaps. So if you just consider this little area of the gap, more often than not, you just fill them. And then you could still, because the point is, that's a bunch of unchallenged, you could consider that a relatively unchallenged area where there's no real two-way trade, right? So if you accept back within there, and there's still fresh positioning, there's really no invalidation for them other than to close out. If you start accepting back within the gap, it's an indication that you don't have your break-even sellers that are looking to get out. So, on the way down, no friction. On the way back up, you'd kind of expect the same behavior. All right, now we'll look at the questions. I'm going to keep an eye on the ES, though. Give me one sec. A pretty ugly poor low today. Singles at yesterday's high. Today's profile just looking very ugly. So normally I have this gridded up. This footprint I normally would have just in a very small window. This level right here, just for anyone who's curious, this is the opening 30-minute range. So, I talk about, I will look at how price is developing in the first 30 seconds. So if we're tight in the first 30 seconds, a lot of times I'll look to play the first break. There's no special science to that. There's no like secret to that. And again, more importantly, it's about how the market trades in that first, very short opening window after. If the market is really tight, you just assume that there's both sides committing, and a break of that tight range is going to lead to some kind of immediate follow through for a few points, just because one side's going to close out. So there's no magic to that 30-second opening range thing that I observe. I know some people talk about it as something that they derive from like the pits. I don't think that there's any real science to it. I think it's just a matter of watching after the market opens. It's two-way trade. If the market is pinned in a region and the market breaks out of that region, you could assume that the volume that came in right at the beginning of the RTH, regular trading hours, one side's going to spill, right? So you could usually take that for, 4 to 5 points. But this is the 30-minute initial balance right here for regular trading hours. Some people look at the hourly. Some people look at, whatever. There's a bunch of different, obviously, everyone has different approaches. I like the 30-minute, honestly. All right. Let's see. Just going through the chat. No, I do not think that FTX is solvent. I think we're way beyond that. So I think Boov, that was what I was just talking about. So the 30-second opening range. So for example, this is it in the ES today. So I mentioned I trade the NQ today off the open, but this is the MES, right? So you could see I had in the ES today, I had 3 trades. Closed out right here for a small loss, closed out along here for a win, and then scaled into a little bit more aggressive long right here, and then closed out up here. But this is the first 30-second opening range. So market open, 30 seconds out. If the market is, and this is, there's no markers on this one because I was looking at the NQ. If we're tight right here, like we are right here, so this is a good example. If we're tight like this, a lot of the times this setup for me is just the first acceptance outside of this, looking for a few points, right? So looking for like 5 points. And it's kind of just a gimme trade. It's not like I'm expecting this to dictate the day whatsoever. There's no science to this, right? It's not anything that's going to have any lasting impact on the day. It's not a special secret. It's not some special alpha. It's just if we open and the market is tight, and we're assuming two-way trade is taking place, well, as we're funneling within a tight range, if we're suddenly accepted outside of that cleanly, then I'm anticipating that whoever got involved right here is going to change their tone or change their positioning. So you're looking for one side to kind of close out and lead to a short-term movement in price. And this is just something that you could, add to your bag of shots, but There's many times it doesn't work. There's many times when it's misleading. And, I've applied it consistently now for a while, but again, there's really not a whole lot that's special to it. This is 30 seconds indicated by these two bars. I think more importantly is what we're looking at right here is the 30-minute opening range. There's a lot of noise that happens within the first 30 minutes. Again, some people use a 1 hour initial balance. Some people use a 30-minute initial balance. So it might be one column or two columns, depending on who you're talking to. Yeah, Scarelli is hilarious. Yeah, I talk to Banks all the time. He's just busy right now, so he was on vacation for a bit. Will I use the same bracket? Yeah, I will use the same bracket trading strategy tomorrow for the actual release. What do you do during the times you're waiting for trades to set up? No. I can't be sitting at my screen all day. I mean, I'm home all the time for the most part, right? I mean, I quote unquote work from home, right? So I'm constantly coming back to the computer. But if I don't see anything, I mark my levels out, I set alerts, and I step away. So I definitely don't wait in front of the screen. But I do your basic recon of the charts and any opportunities that are setting up. If there's any anomalies that stand out, make some notes, set some alerts, and that's it. And I don't set alerts at the levels. I'll set alerts around the levels so that I, can kind of get back to my seat and get back in position if we're kind of remotely approaching levels that I think are important. So, if I have a daily level that I think is significant, I'll set an alert that's maybe between where we are and halfway. Because depending on how we're approaching it, we might be ripping towards it. We might be slowly grinding to it. It's just a reason for me. It gives me a little bit of an ability to step away, obviously. So maybe we just closed the gap and that was it. I mean, that was a bunch of imbalanced positioning. The put-call ratio was nuts leading into this. And you see how the VIX came off right after. So where is my VIX? This huge dump. So alts that I'm looking at. Let's see. Let's go to blue. Things that stand out in particular. I was looking at near strength this morning versus BTC, specifically because near is at an area where you would expect people to really panic, right? Very significant high time frame low, the low of 2021 in this trending move, right after that first very significant macro pullback. And now we're back at that level. So this is kind of the area where, you would expect people to really panic if they already haven't, people to sort of aggressively short through this level, expecting a much more significant breakdown. And because of that, usually these are the most reliable levels to get involved. Again, this is a weekly chart, so things usually take time. But I want to start focusing on this because we are, again, we're in close proximity to a major swing point within market structure. And this would be an area where you might expect, a week-long rebound to occur. And if we are supported by BTC and by Legacy, for example, I don't think there's any reason why alts won't see a significant response to that as well, and for beta to be beta. So, for example, near to find support at an area where most would panic, catch a bunch of traders offside. There's not a lot of people around anymore, but and to see some kind of significant squeeze back up to the next area of market structure, right? There's nothing that really took place within here. Again, that's an easy area for price to recover should the ball get rolling. Also, I am focused on, so I was, in the last week, I was trading looks. Nothing that I'm really looking at right now with respect to looks. We're at where you would expect it to find high time frame resistance. Depending on how ETH and BTC are behaving, how the broader market's behaving, this goes from being a very dangerous resistance to sell to being a very good resistance to sell. But either way, it is a weekly structure, and I think you would want a significant amount of development in this region before getting committed to either. So I will be looking at that actually, because we are right at that level. The point is that you're at an area where you'd expect the market to find resistance, run into some supply, obviously. If we have heaviness across the board, legacy pulls back more, we don't have a breakout in BTC or ETH, well, it's kind of easy to predict what this is going to do. Probably going to see a return back down to that 1450 region, right? Test the top side of the structure that we just broke up from. So that makes this a really good area from a contextual risk reward standpoint to place a short. But I'd rather see something develop rather than just blindly shorting this as it is. So maybe you get something that, starts putting in a lower high right here, where you could sell something like that, right? Seeing signs of absorption up here. I'd obviously have to look at this, the futures market as well, see if we have some kind of build up of positioning and, funding transitioning from whatever it is now to maybe more positive. So we'll take a look at that. That's near, but that's actually what I want to look at next. But looks. So looks, let's look at a chart that has a little bit. Phemex looks is not, Bybit's the same. Bybit liquidity has gone to shit lately too. It's just everybody in this market right now. The benefit of looks is there's not a whole lot of derivatives, right? Mostly spot markets. So that's good. You can see how funding has transitioned throughout the structure. Still negative. So I would be very mindful of selling anything that is still grinding higher on negative funding. Although, if you look at predictive funding and then you look at something like just aggregated futures, aggregated funding rate, non-predictive, these are the same basically. Yeah, I wouldn't be looking to short this yet. I would rather, like I said, want to see a transition from negative to positive, because something like this can easily just continue to squeeze up. And the caveat is it's a high time frame, prior support that you'd expect turn of resistance, but how many times have we seen just things absolutely squeeze up because everyone sells the first level? So you have to think about that while while alts are approaching their significant levels. Just something to be mindful of. Near though, that's what I wanted to see, because see that on Coinalyze. Near, it's not the same story in terms of funding. Positive funding all the way down. So again, this is just an air. If we're just going off a market structure, this is something that gets me interested, right? Or at least it's a reason why I put it on this watch list, but there's not enough there yet for me to say, I'm just going to buy this down here because of that, right? It's just, all right, this is one asset that's at a key level in market structure. Now it's time to pay attention. I can't really get confident about any alts, obviously, until after tomorrow. So they're not something that they're not exactly the focus of my attention right now. Doge still bouncing off that high time frame resistance. I'm not necessarily certain that Elon is going to be integrating Doge. It sounds nice, but it seems like a lot of people bought in anticipation of that. If we just look at Doge on Coinalyze, Doggy Coin. That's what the guy said today at the hearing. Doggy Coin. This is not something that's been faded really. I mean, funding for the most part positive across the board. And I think that a lot of people were probably holding out or maintaining some kind of level of bullishness on Doge. Even myself, it's not something I didn't consider. Because of Elon revamping Twitter and, Twitter Blue coming, redoing Twitter Blue and all the things that implies for content creators and being able to monetize their content and get tipped and get paid. And the assumption is, Elon was going to use Doge. But I think that's probably that'd be a pain in the ass for everything going on right now for them to integrate. Just a lot messier than if they were to integrate just regular dollars, right? Just some kind of USD tipping or their own Twitter coin or who knows. But I don't know. I wouldn't be overly optimistic on that. Yeah. So G-Bane, good. That's a great point. And this is always kind of why I cycle back to the idea of, I've been saying like, you want to wait you want to wait until tomorrow anyway, because whatever happens with BTC or ETH, it's going to translate into alts anyway. They're just going to behave like beta would. But more importantly, it's not the best time to, for some alts, they're, mind you, they're at, quite attractive levels in terms of how far they are off their highs, whether they're completely flatlined. And I get that, right? So for example, like OP, I was looking at this and I'm looking at this thinking, all right, this is locally, we're finding support, prior resistance, still within, a much bigger area of market structure. So there's a lot more to deal with, but I'm sort of focusing on this diagonal trend line right now. Something obviously that, leads to us breaking outside of this high. I think you see a good amount of momentum come in and we're looking at, upwards of $2, yada, yada, yada. All of this still implies, one, it implies strong majors. So this implies BTC and ETH are doing well. This obviously implies TradFi is doing well. But either way, aside from like these few setups that there are that might look attractive. So Litecoin, for example, broke out of this multi-month range, right? Holding the top side of that structure. That's great. We've done that before. Into a very significant area of resistance though. But if we continue to see this bid up, maybe this is going to lead the echo bubble. Maybe, but I would, me personally, rather than look for these just few setups in between and not be that confident, I would rather see Bitcoin and ETH put in very significant moves, much larger reclaims in market structure, and then have sort of that that trickle down wealth effect into a lot of alts, right? Where, just for example, let's don't, take this as a signal, but let's say that BTC comes back up to 30K, right? Kobe tweeting this morning in response to BitBit, something along the lines of it, not taking a long time. And that would be completely within reason for the market to do that, honestly. After this move down, so a 50% retracement would take us back up to 42. So, a quarter of that taking us back up to 27, 28. So a pullback of that magnitude is actually not one that's, I would say is even of magnitude. It's not, it's not abnormal. If you had a move down like this over a long period of time, you would expect that the market is going to have some kind of mean reversion high time frame wise, like some kind of echo bubble, some kind of move back in the opposite direction, even if it did mean it was going to continue down. So that's my point. But something that takes us all the way back up to here, I want to buy alts when that tops, right? That's when I want to be in alts. Or I should just say that's when that's when I want to be really aggressive about paying attention to alts rather than paying attention to BTC and ETH. And I know it's like sometimes my streams might be a little bit more boring than others, because I don't really check out micro caps or anything like that. Especially as BTC and ETH are still, they're not looking great right now. They're not looking horrible, but they're not looking great. So my watch list is, it's obviously not that deep right now, and there's nothing that stands out on it. On its own that says, hey, it's okay, whatever, you don't have to pay attention to what BTC or ETH are doing because this is, showing signs of strength on its own. That's not the case right now. Is ETH finding support right here? Top side of that range. Either way, I don't care. I'm not chasing anything. Tomorrow is extremely significant day in terms of events. So I would rather be buying ETH at 1350 and waiting, right? Or even slightly later than that if the market rips up, than buying early and getting surprised with some kind of negative print or hawkish response by Powell. Yeah, GBane, we might have different approaches. I think that my point was that if BTC got back, if BTC gave what is a reasonable mean reversion on the high time frame, if the market came back up here, that trickle down or consolidation that took place would lead to, I think, a massive wealth effect for alts. I mean, listen, in the bear market, it's where everyone starts focusing on how all this stuff is vapor and it's meaningless. But listen, people will forget about that when candles have been green for long enough. Start buying back into the garbage again. And it's never needed any kind of working business to pump in the first place. So business, protocol, idea, whatever. Yeah, so Badmon, I do get why people are very bullish. I woke up very bullish too. And not bullish waking up, I'm sorry. After CPI, I was thinking, wow, it's really great. Like, we're trending down. It's a great sign. But then reality sets in, and it's just one print. And I think we all want a bull market more than a bear market, right? I mean, that's normal. And I think that there's been so many negative things in this market that green candles will, I guess, help to cover some of that pain that people have experienced, and it just felt depressing, right? That's part of the market cycle. So it felt good last night. The market pumped $200 when SBF was arrested, and it feels good because of CPI today. But tomorrow is the more important event, and anyone who's really smart understands that, and they're not positioning in advance right now, trying to front run anything, because again, a big move in markets. Earlier this morning, I shared a heat map of the entire market, and it was ripping, right? In response to this, pre-market, everything up. And that's against what they're trying to achieve, basically. Funding for ETH, flipping positive. We're going, exceedingly positive at this point. It's not like, this open interest might be very misleading. I don't know with this. So I talked about unchallenged positioning, though. I talk about that concept. And order flow can go stale, right? But in terms of this gap right here, unchallenged positioning, it's reasonable to expect that there might be some unchallenged positioning there. So if you just take the threshold of the gap right? And then we do the same for open interest. Open interest is still quite elevated from where price is. So unchallenged, meaning on the way down, there's going to be people that short into a breakdown, right? They're not getting in the most attractively defined position. So if you short here, you're probably going to close out if the market comes back towards your entry, right? You know, you ever chase a breakout? What do? Market tips back towards your entry. If you're smart, you close out. So this is still unchallenged, right? There's no real two-way trade there. Two-way trade leaves distribution like that, right? It leaves some kind of pickup in activity, whether it's a LVN, you know, a HVN on a volume profile or on a TPO chart. Really none of that here. So the idea that it's unchallenged, meaning the market never came back to test it, you know, because the open interest is still elevated, it's possible that people are still holding short from there. So again, 1350 could see a pretty rapid move, right? Meaning break above and hold of 1350, because you could still say that it's possible that there is unchallenged positioning there. I did want to substantiate that by looking at open interest, because there's a lot of times where you might have something we've been away from for weeks now, and everything is closed out since then. There's no order flow that's still in position there, that's still, you know, defining an invalidation around there, and that order or that idea has gone stale. A lot of order flow setups are like that, right? If you're looking at a CVD divergence from a week ago, well, what are the chances are that that positioning is still intact, right? And it didn't turn over. Same thing with, you know, any kind of anomaly or setup on a footprint. The further away you get from it, the more likely it's stale. But in this case, you actually do have a case to be made for, because of that pickup in open interest since we've been down here, for any kind of shorts that might be defined above this high, right? For any kind of shorts that got involved on the way down. And there's a good case to be made for that. BTC, let's see. You'd have to go all the way back to here. We're below that. Open interest, kind of in line, right? So it's not as much of a case for BTC. I think that you get people chasing this up either way. If ETH squeezes, we know that BTC is going to squeeze too. So it'll just squeeze or it'll follow. Probably going to wrap it up in a second. What do I think about Insilico's response? He just likes to push buttons. He's a gremlin. I like Insilico. He's a gremlin, though. He knows that I never would go all into anything. I'm a person who goes all in after a trend is already in progress. I've always said that. I prefer to buy into markets that are already trending, have already reclaimed higher levels. And that might mean putting on the bulk of money if we're back above, for example, something like 21 or 22K. Right? So if we're looking at this structure, you might say, well, you know, the best place to get involved if the market's coming back up to 30K is clearly here, where we're furthest from that. But I mean, honestly, the way I behave is if the market's gone sideways for a long period of time, if we've reclaimed high time frame levels, I go really hard when we do that. And that's, you know, the cost of doing business means I missed out on this, but I don't really care because I have a lot more certainty and I could sleep easier at night when the market is proving that it's strong. So I'm never, you know, if I catch a falling knife, even, I talk about this all the time. Like, I'll talk about buying the liquidations, buying the lows. I do that, and I'm out of that position probably within that day. So but that's that, guys. I'm going to wrap it up. Don't forget, go to this post, leave a comment, and I will do a random drawing from this comment pool, and I'll release it tomorrow morning and give two Arkham invites away. Arkham is awesome. So we'll just go to Arkham again. Well, I'll go to it to begin with. Let's look. I don't have anything connected to this right now. Let's go to the Explorer. Let's look for Binance. I mean, this is just an awesome platform. Inflows, outflows. Look at the visualizer. Hold on one sec. We'll grab Binance's address. Let's actually follow an outflow to this address. I mean, it's an amazing platform. So if you're interested, leave a comment. Tell me what you like. Tell me what you didn't like. Don't say anything. You know, you could leave a period. I'm just going to enter it into a random drawing, and I will pick 2 people to give away those invites to. Wish you guys well. Wish I had more to say, but today's not that significant. Today was exciting, but not significant. Tomorrow we will have a lot more of an idea of what to expect until year end. All right, guys. Till next time.